Yeah. So let us now go. Okay, class 8 today's. So let me go back to the earlier one. Okay, so last class we have understood the candlesticks pattern. There are different types of the candlesticks. So we have first looked into the single pattern. That means only the candlestick of a one particular day or one particular time frame. It can be 5 minutes, 15 minutes, 1 hour, 4 hour, etc. So this is a single candlestick pattern on which you will decide something. There are few kinds. So one is that full body, that means the body length is very high. The second is the type, how it looks into. So it can be classified as a hammer, hanging man, shooting star. But the name does not matter. You should be acquainted with the pattern, and then whenever there is such indication, there will be change in the what you call the either uptrend to downtrend or downtrend to uptrend. And then there are the mixed candlestick pattern we have seen, the bullish belt, bearish belt. Okay. And then this is the two candlestick pattern we have seen. One is the bullish engulfing or bearish engulfing. It looks like the similar, and it is also a change of the trend of the this thing. And this engulfing and harami pattern is very, very common. You will find many occurrences. So it will typically guide you that on which particular date to buy a stock. And then we have seen the dark cloud cover versus piercing, which is similar to the previous one, but a little bit overlapping. It is not fully engulfing. But the result will be the same. And then we have seen the three candlestick pattern, which is typically morning star, evening star. This is the type, okay, with a gap of the candlesticks. All these candlesticks, interestingly, have a psychological pattern. So many of the candlestick patterns can be understood if you know the psychology. There is a fantastic book I will mention at the end. If you can read that book, then you will understand what is the psychology. Okay. Then we have understood also the volume. Suddenly, the hike in the volume also will change the direction of the price. Then we have
Can I
understood
ask you a question here,
yeah,
Sudhabanjan? Yeah.
yes.
So for the candlestick patterns, do you use them all by themselves or you combine with any other uh, technical characteristics for the decision?
Obviously, it will be not, I told you earlier, there are several technical characteristics. So you have to combine with that. But the candlestick pattern will tell you, will guide you on what particular date you will buy or the sell. Okay. Obviously, you have to club with the other technical patterns.
Okay, so do you have any specific technical, because there's so many when you're
I
reading the yeah.
I think covered in the earlier classes. If you go back, that we have given this one.
Yeah,
And
yeah.
okay, so you have to combine all these things.
Okay, okay.
Okay, that's why we have covered in the classes.
No, I thought
And
there is one lesser small number than the one you already covered when you're
uh,
using it with the
okay,
pattern.
but generally, what I have taught in one of the classes, Ichimoku, it is the single pattern which is very, very reliable. I have tested, and
You can
so
use it by themselves itself,
yes,
right? Okay,
so just look at the Ichimoku and then candlestick pattern, and then you can decide on what particular date you can do.
okay,
Okay,
okay.
so we have gone to the risk management. And then in the risk management, we have covered that, okay, risk versus return, there is a trend. We have shown also that how to do the portfolio management. That means diversify in large number of these things, but the effort will be more and more. But it is better that if you can diversify over a number of the stocks, then your risk management will be better. Obviously, it will demand for the more tracking effort. And then there are different kinds of the investor, holy cow, pig farmer, rice miller. I've explained all these things. Basically, it is the duration to which you will hold the stocks. Okay, and then we know that selling is the biggest word, and then there are many people they fail to sell at the right point of time. And then a famous quote from Napoleon that if you are not quick in the warfield, then you will get defeated, basically. So we have seen that, okay, how many investors lose the money because they are not able to sell at the right point of time. Then stop loss, how to set the stop loss that we have discussed. There are a few techniques of setting the stop loss. And then let's start with today's class. Okay, so one of the important things is that obviously I know that the goal of this class is to enable you to uh, know about the stocks, increase your individual capability, and then take your own decision. But before taking that decision, I would recommend that you should know what is the viewpoint from multiple experts in the market. So after you hear from the multiple experts from the uh, multiple experts, then you have to apply your own decision. See, we have learned that the market is never bad, whether it is falling because of the COVID, whether is the economy is bad. Always there will be people who will make money in the stock market. And in the earlier classes, I have shown that it is possible even now also. Now, you have to take your own decision, and then there are few good for the Indian sides. In foreign countries, there will be certain things, and you will come to know that okay, what are the good stocks, what are the how to pick up, and let me go through few of them. One of the interesting, is a valueresearchonline.com. The site was much better earlier, but I think nowadays it is becoming a little bit commercial. But I will just show you because I showed you earlier that okay, how to select the top ranking mutual fund, and then whatever mutual funds are holding, uh, then select on this. So this is the valueresearchonline.com. Let it open. Okay, so if you go to the funds, and then here the funds and the stocks, and then there are different kinds of the fund, and it shows also a trend of the funds over a period of time, say 1 day, 1 week, 1 month. Okay, how a particular category of the funds, the mid cap, small cap, okay, large cap, large and mid cap, and we have explained all this, what is called that mid cap. So generally what we have seen that you see that 1 month how the mid cap stocks have grown. Okay, but the last 1 year or 3 years the performance is bad. But if you see over a period of time, the 10 years, it is good. Let me go to the maybe mid cap. Okay, and you can select from this one, and then there is some rating given by this company, and then you can sort it. So I have sorted, and then Axis Mid Cap Fund. It is, I mean, they have rated as a 5 star. So let us look into that. And then here you will see that this is this thing. Now here you can see what is the portfolio. This is the portfolio of the fund, and then how they have diversified healthcare, because now healthcare is going up. Okay. Now you will see that these are the stocks now currently they are focusing on. Avenue Supermarket, Ipkala, Bata India. So these are and then they have also mentioned here percentage of the assets from the highest to the lowest. Okay. So you can consider this one. The same thing you can do for the money control. In the money control also there are things, and because typically if you go to the money control, you'll go to the mutual fund. Okay. And then there will be similar things. Okay. So you can go to that equity mid cap mutual fund and then see that what are the top levels. Obviously the ranking, but here one thing is there is a CRISIL ranking. Now CRISIL ranking is basically now you can see the Axis mid cap. So both the sites are recommending, okay, this is the better fund, and then you can go for that and then pick up a few of the top ones. Now, don't always depend on the mutual fund, because whether Axis or whether something else, here also you can go to the portfolio and then select. Okay. And here go, and then you can select the portfolio summary. You can see the same things are happening. And then now you can go for the individual decision. Let me open our stock market. Okay. And then conclude about that particular stock. For example, if I go here and then I go for Avenue Supermarket or DMart. Okay. So the DMart, if I go for the 6 months period of time or 1 year period of time, you'll see the stock is rising. Okay. That's why mutual fund investors are very interested, and then they're investing this stock market. This is a 1 week thing, and if you want 1 day also, you can go for that. Okay, but you will see that stock is now above the Ichimoku cloud, so you can consider. I mean, purchasing this particular stock. Okay, now we have to see the candlesticks pattern and apply. Okay, now let me go, and also you can have a different view. For example, so you can see now the more or less MACD is above zero. So, and also here the crossing is there. You can put on the Ichimoku and you can see that the stock is what purchasing or not. Obviously, it is an uptrend stock. It is above cloud. Now, this is a way that you have to take a decision. But also, there is one interesting thing that you have to also trust with the mutual fund managers. Interestingly, there is a rank of the mutual fund, because finally, what it matters is that who is the man behind the gun. Okay, so there is an interesting site which uh, show you the typically rank of the fund managers. Many of you are, doing this one. So this is the typical list of the fund managers that you are seeing. And if you are investing in some mutual fund or selecting some mutual fund in order to select some stocks. So there are fund managers whom you should know that what is their background, and then you can go and then know about that. where he has worked, and etc. Okay, so this is the small information for you. Then another important is that you have to read the research report. It is very important that you have to read the research report. Let me go to the trendline.com. Is a very interesting site, Trendline. And then in the trend line, for example, you are searching about anything, Avenue Supermarket or say DMart. You go here, you go to the, you will see that, okay, this is the shareholding. It is that monthly mutual fund holding. Yeah. Now you will see that how many companies now are buying or selling. So this is the companies or the mutual fund companies who are holding the stock. I showed you in one of the checklist in the earlier slide that if you are selecting a stock and nobody is interested in the stock, better to avoid the stock, because you are not going to decide the market pool. It is the mutual fund managers who are going to decide the market pool. Okay, and this will give a statistics how people are buying and then selling this one. Here you go to the report site, okay? And then in the report you will see that there are reports, and then you can download the report, and then maybe I don't know. Okay, and you can know pretty detail about this company in one single report. You can know about the technical and the fundamental analysis. They have given a ICICI Direct is a very famous company, and they have given a whole rating. And then you should go through the research report, and then you will understand something that okay, how good is the company? Okay, and it will also try to consolidate and try to evaluate something. Uh, but sometimes research reports can be a little bit misdirecting because it wants the investor to purchase because they have taken a decision to purchase. There's another interesting site which I'm aware of, Rakesh Junjunwala. You know, Rakesh Junjunwala uh, is a, is the Warren Buffett of India, and he has earned lot of money. I think just before the COVID fall, his asset wealth was 10,000 crore, and he has started his career with the only 5,000 rupee taking from his father. Okay, now, so this is a good site where there are fans of Rakesh Jhunjhunwala. Even there are mutual fund managers. They typically post here, and they, uh, I mean, they give lot of tips and their judgments. Okay, and then they give lot of. So this is the site to watch for you, and it's you will hear their viewpoints. Okay, so I've seen this another reliable site. Another site, before I forgot to mention, it is yeah, Value Picker. Now, Value Picker is an interesting site where in there is a forum, and there are very learned investors who actually takes all the information from the market. They do their own analysis and they post there. For example, if I go to Avenue Supermarket, okay, and you will find it here, and then there are a lot of people who will be commenting about that. and you need to see that how they are doing the analysis. Okay, so they will do a lot of analysis from here and there, from reading from the newspaper, and they will also, many of them will attend the uh, quarterly call, which is arranged by the companies, because the company has to explain in front of the investors, and they extract the lot of information and then place a single this forum. So I find this particular site very, very interesting, and this group is trying to do a lot of things. They are trying to do the analysis by themselves. It is a good site. Okay. I've not visited Crisil. Crisil is a rating company where individual companies are rated. You will get a lot of reports from the Crisil side. Now, let me go to the next point. The SIP, Systematic Investing Plan. SIP is a great tool, I would say. And if one religiously follows SIP, I know many people are following the concept of the systematic investing plan in terms of the mutual fund. Typically, all of us are having the HDFC bank account. And in the HDFC bank account, if you can set up the mutual fund, and then you can set a trigger of the SIP, and then automatically your mutual fund will be purchased through the SIP. Now, where is the wonder of the SIP? The SIP is actually a tool. Let me show you conceptually by thing. Say at this point of time, this is a typically, I mean, stock market during the time when there was a great financial crunch. So now COVID is another crunch. So 2008, the Sensex is falling down this one. And then at this point of time. Now imagine some people who have bought the stock at this point of time, and then maybe some index stocks. So they have, they are, and they fail to sell those stocks. Okay, now at this point of time, in the, I mean, after 3 years, what will be the value of the stocks? The same as whatever they have, I mean, purchased earlier. So it will be almost zero growth. Now, here is the wonder of the SIP. Now, SIP reduces. Okay, now let me try to open one Excel sheet where I have shown you a person who has invested systematically a small amount of that, and then either in the mutual fund or this one. And I have compared this one. This is the typical uh, date of the investment, and they have invested some 1,000 rupee amount, and correspondingly the units are purchased, and this is the cumulative value of the unit. And then over 3 years they have invested, and there is a calculation called CAGR, cumulative annual growth rate. I will explain this later on, but all you need to see that now the growth rate, the SIP has returned at point B 26.06%, which is the average over, I mean, the annual growth rate. Is it not amazing? So even if you have money now in your bank account lying, do not invest in one shot, but spread out your investment over a period of time. I mean, this I'm looking, because while you have done the SIP, you have not looked at the technical analysis. The people who will look at the technical analysis and implement the concept of the SIP will get equal or much more benefit, because they know exactly after doing all these things on what date to buy. But do not buy in a huge amount of the thing. You can take a decision. For example, you have got typically 1 lakh rupees or 0.1 million rupees. You can decide that you spread the amount, and then every month maybe you invest only say 10,000 rupees, and then spread over say 10 months period of time, and distribute this money, not in a one single shot. This is the advantage of this. See, if we go almost the last topic, monitor performance of the funds regularly. This is the ultimate of the things. I mean, all of you know who are in the software industry, just planning and executing or assigning the task to the people does not matter. The success lies in the monitoring. And then let us learn today that how we can monitor. So there is a famous dialogue by Charles Darwin. It is not the strongest or the most intelligent who will survive, but those who can best manage change. So, how are you going to track the performance? So, first of all, are you measuring your growth of the invested stock? Now, this is very important. As a overall, you have to measure the performance of the each and every stock that you are holding, and as a overall group. Are you observing the quarterly performance? Each of the stock, whether it is going up to an expectation. For example, you have set a benchmark that I will have minimum 12% return overall on annually. Okay. I have much more better expectation. I have shown you in the earlier things that within few days, even I have made, I mean, maybe a CAGR of the 20%. So, but to begin with, you can set a target that, okay, anything falls below 12% is not that particular stock is not cup of a tea. So you have to now decide. So then you have to do a benchmarking among the stocks. It is typically yearly performance monitoring of a group of employees. And when you do the performance monitoring, you'll see among the 10 stocks, who are the leaders, who are the laggards. So obviously, you cannot tolerate the laggards because the laggards will typically pull down the overall performance of the growth of your overall portfolio. So ruthlessly, you have to take out the laggards and then you have to pump the same money in the leaders. That's very simple thing. For example, you have a 100 rupees stock you have invested and the laggard is now currently giving 90 rupees, whereas another leader is giving 125 rupees. So even if you have not sold the stocks, that 90 rupee you can ruthlessly sell, and with the same amount you can buy, obviously after seeing the technical analysis, the stock which is generating 125 rupees. Is a very simple theory. By selling and buying the same stocks, you are actually starting at the same level, but only you are improving the better probability in the future. Okay. And then one of the last point is that have you maintained your trade book? That means for each buy, how much is the profit or the loss? This is very important concept. I will give you one of the example. And uh, before that, I would say, okay, before that, let us first understand the CAGR. And then I will show you a practical example of the stocks that I have purchased and with a real, I mean, it is not like that it is a forged data, but some of the stocks I have deleted in order to understand better. So, cumulative annual growth rate. You should remember one and only one figure. Unlike the technical analysis, where there are multiple parameters to evaluate that when to buy, when to sell. Now, for the measurement of the performance, there is one and only one, which is the CAGR. If you understand what is CAGR, how to calculate the CAGR, how to update with the stock of the CAGR, you have 100% control of your stock. You do not need to look at any of the parameter. If some mutual fund managers or their representative or any agent comes to you and then talks about, sir, my fund is very good, it is doing like that, this is very good, you will ask only one question: what is the current CAGR of that particular mutual fund? And then what is the benchmarking with the other mutual fund? That's all. Only one single question. Now, this, what you call, before going that, let me first explain what is CAGR. So, sorry, link this. So, what is the CAGR? Now, let us assume that you have done this transaction. Okay, this is the Amara Raja battery. You have purchased on 1st of January 2013. You have done a buy at a market price of 310.5. You have bought 10 quantities, and then this is the value. That means market price into the quantity. Interesting, the value is now negative because imagine your pocket, and from your pocket, 3,105 rupees has gone out. Whenever the money is going out, you consider as a negative. Whenever money is coming back, that means you are selling some stocks, it is a positive. Okay. So here we have sold the stock, the same double stocks, but in a different quantity. And then I've gained 1,300 rupees. So, and today at 1st of February 2017, you are evaluating what is the performance. In fact, you can evaluate at any point of time, but this is on 1st of February, you have taken a snapshot. Now, what is the performance? Now, on this particular date, I have evaluated what is the, I have seen that overall, what is my portfolio. So, I've the stock report has given me, without going into further details, that the total value of the portfolio is now 18,599. That is overall. I don't want to go into nitty-gritty. Now, with this, how do I calculate? Now, first I assume that the overall CAGR is say 23.6%. It can be much less also. Okay. Say, let's assume that I am having some 10%. Let's say. Okay. Now, if I put the 10%, you will see now this one is the overall growth. And how this overall growth is calculated? So we have to go back to our school days. In the school days, is the current value is equal to invested value multiplied by 1 plus CAGR. This is the CAGR to the power the time in years. Okay, this is a very simple formula. And this is the growth if you have purchased your house and then paying the EMI. The formula is the same. So here on 1st of February, I typically calculate what is the difference. That means for how much period of time this investment has done. So then I have gone to this, this particular minus this divided by 365 or 365.45, whatever is that. And then this is the total years. And then I have gone to this formula. And basically, this formula is that the value of the investment into 1 plus, I take this one, CAGR, and then to the power this time. Now I have arrived this one. And then my total value is today is this thing. Rather, if I go here, this amount of the money is going to come back. Now, after it comes, the total addition, this value should be zero value. Now, currently it is not zero value. It is 4,058. Why it should be coming zero value? Because if it has run for so much period of time, today the value should be exactly the same value that I am now having the portfolio value. But currently it is not giving, so there is a gap. So what I have to do, I have to adjust this. Now, how do I adjust this? Let me increase to 12%. Okay, now I can see that this value has changed and then it has become 4227. So I have to change it more. Let's say 15%. It has further reduced. So I'll change to 20%. There's further reduced. So I now Go typically say 24%. It is 24%, sorry, 24%. So it has become, so minus. Now it has gone to negative. So it is less than 24%. So maybe I will put some 22.5%. And then it again. So I have to do a iteration. Now this is very painful, correct? So interestingly, the first one, which is called Excel, has a formula, and the formula is like that. Go to the data. You have to select the cell here. Go to the data. What if analysis goal seek? In the goal seek, set the cell value, this one, to a value called 0. Okay, so set this J, this one is a 0. By changing the cell, you select this one and then do the OK. Okay, so it is now doing the iteration by yourself. And then it has reached a figure of 23.6%. So this is how to make. There's a second method which is automated. There's a built-in formula in the XIRR. And the XIRR, you can also do the same thing. And there's a method of the XIRR. And you can see that how this method is calculated. Just a minute. I don't know whether I put it. Anyway, if you read the formula, it is very easy that XIRR is placed. I mean, you have to put basically a date and the value invested, and then you put a figure, and then XIRR will be calculated. Okay, I think I have not explained it, but it can be done very easily in the Excel. So now you can understand it is not only there, but see, it is important that individual stock also you should calculate. So this one I have calculated for the what you call only for the overall portfolio, but individual stock level also XIRR can be calculated. Okay, and that's it. Now, any question on the XIRR? I mean, sorry, CAGR. Did you understand? Yeah, this is one of the most important things you have to understand. If you have any question, then maybe I can answer. Okay, I hope there is no question. Are you able to listen to me? I hope so. Okay.
Yes, sir.
Probably we have to sit and calculate once and then come back.
Yes, yes. So I also have a stock things. Okay, this is a group of the stocks I typically hold, and they're this thing. And you can see this is my report. I directly download from my stockbroker Zerodha, and then here I have put the formula. Okay, and you have put the formula, and I calculate the profit at the. I calculate the profit, and then here for each and every stock I have put, okay, how much is the net quantity bought, what is the total Y value. So I put all these formulas here. What is the total sale value? What is the investment total? What is the current market price? I've shown you in the earlier things. So the current market price, I mean, this one, which I have shown in the earlier. And it picks up for every stock what is the today, what is the price, it will pick up this value, it will put it here, and then total market value, how much profit I have made it, what is the profit percentage, that means this today's value minus the invested value divided by the invested value. And then here, the individual CAGR will come, which is a benchmark. Now, I put a macro also because as you can see that whenever the price changes, this value, there will be gap. So when I do a macro run, currently alkyl amines is showing this one, okay? And then I will press the Control W and sorry, just a minute. I think it is closed. Okay. Now, if I do the Control W, the macro starts running, and then it will give the current return. So I can see the CAGR is this thing. Okay. I have to do the same thing. Actually, I have created a batch macro. Okay. So that if I press, sorry. So now I can see, and then I can sort out, and then whatever is not giving so much not giving good performance, I can make it out. Now I can see that alkyl amines, my current CAGR is 150%. And how much I have invested in this particular stock? I've invested total 81,000, and I'm already making overall 19% profit. But there are other stocks which are not giving so much of thing. Okay, for example, if I give now to this one, let's see, Indraprastha Gas Limited. Okay, so currently it is not so much giving. So what I mean to say that there can be great amount of the automation which can be done, and I will monitor the performance of the individual stocks, and then it is a judgmental factor for me. And that's all. Okay. So many people, okay. Now, how much time should you invest? My idea is that at least spend 30 minutes beyond the tracking all the stocks and 2 sessions in a week. If you cannot spend that time, forget about the stock market investment. And you have to be very, very disciplined about the tracking. That means today you have tracked, and then for 6 months you have not done anything. It's not like that. Tracking has to be done for the stock market very, very regularly. Okay. As you know that many of the activities in our office, we keep the weekly call. Why? Because the weekly tracking is there. So you can also do a weekly tracking based on not exactly day-to-day tracking. It will be too much. Okay. And the last one I've already shown the Google Face. One of the important thing is that the control of the emotions. This is the most important. You have to be aware in the stock market. In the stock market, it is simply following the discipline, nothing else. Have a strategy, follow the discipline. Do not fall in victim of the emotions. Many people fall in the victim of the emotions, and then they lose from the stock market. Now, here is the cycle of the stock market. Whenever your prices are high, you are totally euphoria and you feel like at top of the heaven, and you become a little bit complacent also. I mean, that is very dangerous. And then slowly, slowly, when it starts uh, falling down, you go into the mood of the anxiety. Then, okay, denial. What is the denial? See, I'm a long-term investor, and this is a temporary setback. I know that there are good times which will come. But as you watch the stock market without any action, you will see slowly, slowly your euphoria will be turning from the anxiety through denial to the fear. And lastly, it will be desperation. I know one or two of my colleagues who personally came to my room, and then they are totally frustrated because they feel their luck is exceptionally bad. And whatever they have invested, it has now gone almost one-tenth value. But the fact we have earlier learned from this session is that this day does not come in one day. It has gone through all these stages. And you know, one interesting thing about the human psychology, human psychology follows a pattern. And the pattern also is a very, very predictive. It is not that something unique for everybody. It is something not that it has only happened to you. It has happened to each and everyone. So if you understand the pattern, you will be successful. So finally, it will go to the panic stage, depression stage, and then whenever it is going a little bit up, you will be going into slowly the hope stage. The maximum number of the people go who are able to utilize the transition from the euphoria to the anxiety, they'll quickly get out of the stock market, and then they will work on the hope, relief, and the optimism. But they will not have the feeling. I mean, they will enter the market like that, depending on the technical analysis. Okay. So again, I quote the very important thing from the Benjamin Graham. The market is a pendulum that forever swings between unsustainable optimism, which makes the stocks too expensive, and the unjustified pessimism, which makes them too cheap. The intelligent investor is a realist who sells the optimist and buys from the pessimist. Okay, now I've seen many, I mean, most of the investors, uh, they find it very easy to invest, but very difficult to invest. I'm not no exception. I try to do that, but those who are the great investors, they will try to use this one. Intelligence investors, they will constantly do this thing. See, the greatest, what you call the know-how in the stock market is how to sell and not the how to buy. Okay, so market is basically driven by the two major emotions, fear and the greed. I can show you. I mean, in order to know the fear and the greed, you do not have to be what you call a very good investor. You can see. I mean, even a stock like Avenue Supermarket, this one has fallen a trap of the fear. Okay, and then slowly, slowly, then the hope has started. And if you go to the any of the stocks, any of the good stocks, let me go to the Alkylamines. Is now gone. Okay. And the same thing has happened. It has fallen down during the COVID time, and then it is now coming up. You want to go, say, art industries, another thing. It has fallen down, and then it is. Now, those who are able to convert the desperation into the hope, and they are able to, I mean, enter through the market at this junction point and seeing all this Ichimoku and other things, they are the real gainer in the stock market. Okay? So, one important thing, victims of the sentiment. This is my first investment. I would like to retain it. Is of the wrong impression. Okay, I am working for these companies. Maybe I am working for the Siemens. But even if the Siemens stock is falling down, I love my company. I love the stocks. Basically, you are not loving the stocks. What you love is the only money. Money is the sole decision maker, not which company the stock belongs to you. This is a very important psychology you have to understand. To you, whether it is a Avenue supermarket, whether it is a Bajaj Finance, whether it is a what you call Aurobindo Pharma, it does not matter. To you, it is only money. Okay. And then you are also having a false hope. I know it is sick now, it has fallen down. Okay. It was a great performer, very, very great performer. But one day it shall go. Typical, I'll give another example. 80 foods. Or say Dawa is going up. You see the stock. Wow, one time it was 101 rupees, now it has fallen down 16 rupees. But you have not thought why it has gone to 16 rupees. From the 105 rupees to 16 rupees. Okay. But still you are holding the stock and then having the hope that one day it will become 105 rupees. If it does not come, what? So then you have to get out of that. I mean, I know it is sick now. One day it shall go. Okay. Now, people who utilizes the emotions, I am one of them. It is not your individually emotion, but it is the people's emotion that you are utilizing. And typically, many people they do not look back at the historical things. Example: in 18 July 2012, Maruti is one of the biggest car maker in India. Okay, it was hit by the violence and the workers. The stock prices fell down. In fact, that time I purchased a lot of stocks of Maruti and I made phenomenal money because that was the typically the period of the desperation and the frustration. Aurobindo Pharma in 2011, it got warning letter from the US FDA and then it asked for a detailed action. Immediately the stock price crashed down. Okay. And thereafter the stock rose. Rakesh Junjunwala has large amount of the stock in Aurobindo Motors, but Aurobindo Motors have not performed for a long time. Now it is picking up. See, for me it is only transient. I also started picking up Aurobindo Motors. But whenever it will be in a position to sell out, I simply get out of the Aurobindo Motors. There's a famous things about the Nestle India. You know that there was allegation of the Ajinomoto. Okay, and the government FDA of India rather has found out that they were using the high amount of these things and which is a carcinogenic, and so the stock price of Nestle has fallen down. Everybody started selling out. I started picking up. Now you see the price of the Nestle. It is very, very high. Now you have to see a reverse emotion of the market. Okay, because you will see everything is transient in life, and these companies are no exception for that. It is only a period of time. This is good. Do you think that the COVID-19 it is going to be a long lasting? Yes, long lasting it will be. Do you think that the complete human population of the world is going to be zero because of the COVID attack? Even if we assume that there will be 100% people, I mean, they are going to be infected. No, the past statistics said only maybe 3 to 5% of the death of the infected people. So definitely one point of time, human race will come out of the COVID. It will go back to the normal economic activity, all the companies, they will function normally. At present point of time, we do not know when it will come up, but it will come up. So those who will utilize this concept and then look much ahead, because they do not have any time pressure. It is not like that. I mean, tomorrow I have to sell the stocks. Okay, it is only investment. Another important aspect is that, let me see now. It is already 8:30. I will not. I'll just stop here. Okay, and ask me a few questions which I can take up. Okay, and we end today. Any easy question?
I have a question, Debanjan.
Hi,
Uh,
tell me.
Hi. See, basically, as you taught us in the beginning of the class to go with the fundamental analysis of the company. So
Yeah.
when we start with that, with certain screeners or some, tracking some websites and so on. So we find some, parameters where we found that these companies are good. But most of the times what happens is those companies are overvalued because, like us, hundreds crores of people would have thought that. And when we look at that valuation, it is already overvalued. So is it good to pick such stocks?
Yes. My question is yes. Now you have to understand one simple rule. I think there was a one. I have put one interesting thing. Very at the beginning. Yeah. Do you remember this slide?
Mm-hmm.
When you go to the market to buy the vegetable, do you ask really the person why the price of one particular vegetable is like that? Do you ask?
No.
Why don't you ask? Why the price of one thing is very high? Maybe today the price of the cabbage is very low, but the price of maybe the cauliflower is very high. Do you really ask? You don't ask, correct?
Yeah.
Because there is a great economic background behind that. Obviously, for the vegetable, the factors that drive the price of a vegetable is the demand and the supply. Okay. Also, how much is the cost of the production? Okay. These are the important things. But for a company, tell me, if company produces a good, is there really any benchmark how much the company will make a profit? There is no benchmark. Nowhere in none of the Bible, Gita, any of the scriptures, it is written how much a company will make a profit. So basically, the whole stock market is based on the investor's feeling. What you feel is the good thing about that particular price. And then there is no price. I've earlier shown you one that what you call the LT Foods, the what. Is it a bad company if you do the financial analysis? And if you see the amount of the turnover it generates, there are many companies who are generating almost the same turnover, but their stock price is not 16 rupees or 20 rupees. Their stock price is minimum, say 4,000 rupees. Why? There is no answer to that. And this makes stock market very interesting. A stock price is very pricey because it is having exceptional high demand. It is not you or me. All the API, FII, DII, they are running behind it. They know if I invest in this company will grow. And this company, I have developed a lot of trust. So I do not, it does not matter what is the price of the company. Many companies recruit the core people. You know the Apple R&D head. I forgot his name. He does not what you call care what the company pays him. He does not care that he has to sustain in that particular organization because Apple knows if he resigns, he goes to some other company, the Apple will fall down. It is not that person will fall down. So, like that, the investors also know that uh, the company I can trust and it will give me the money. So, so that's why the price is decided. So many people are of the wrong opinion that stock is now going cheap. Hi man, it is going cheap and I can buy a lot of stocks. But why it is going cheap? So one of the book actually advised that buy only 52 weeks high stocks. Do not buy 52-week low stocks. That means the stocks which are now going high, it has got higher probability. But you have to be a little bit careful because sometimes there will be reversal of the trend. Okay. I interestingly met one person and he has founded one portfolio management service. And behind that, Rakesh Jhunjhunwala had a lot of stakes. So one of my friend is associated with a bank. We invest large amount of money with a portfolio management service investors. Bank hire those. So I had a one-to-one meeting with him, and he advised me, Mr. Ray, get out of the Bajaj Finance stocks. I'm talking about 4 years back. I did not get out. I told you your prediction is totally wrong. You may be a very big, what do you call, portfolio manager. He said, no, it is overpriced. Okay. Now, 4 years back, he predicted. From that, I did not exit. I only started because I knew that it is going up, up, up. Only during the COVID fall down, the Bajaj Finance stock is going up. Let me go back to the sample thing, where I have seen this. I did not exit from the stock. Still, my profit percentage is 164%. I am, even after falling down, I am making 37.2 year on year. This is the CAGR. Now, had I listened to that particular gentleman, because he had the idea, it is overpriced stuff. So, could I answer your question?
Yes, Diban. Thanks.
Okay. Any other question?
Debanjan Bhushan here.
Hi,
Yeah,
Bhushan.
this question is related to this candlesticks. See, sometimes what happens is if I keep a 5 minutes or 15 minutes, I see altogether different. Whatever I see in 5 minutes, in 15 minutes, I see altogether different.
That's excellent question. Okay. So, on what basis you will
Yes,
take
yes.
it?
Or for intraday, which one I need to see, or for long term, which one I need to see, which duration candles?
That's a very good question. So all what it needs, sorry, all what is needed is that what is your investor psychology? What is your target? If your target is to make long-term money, okay, then you will see 1 day or even 1 week analysis. You can see the 1 week analysis. Okay. In the 1 week analysis, let's go to the DMART. 1 week analysis is going up, 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 up. Okay, there is a certain thing. I think now there will be one downtrend because I've shown you, no, it is that what you call dark cloud cover. Okay, if you go for the 1 day analysis, let's go. You see, it is now going down. Okay, but still it is above the Ichimoku. Still, it is not in a position to sell out the stock. Okay, you can see there's a large this thing. In fact, many of the investor will now try to buy the stock because it's not a selling thing. If you are a short-term investor, okay, maybe you are working, trying to do maybe within quick money because you can also enter at this point of time 2266 and then 2486. And then within few days, you can make huge money. There are people like that. Okay. So if you are a short-term investor, maybe 14 minutes, now you will see, you will start buying this stock because it has just risen, but it is now pulling down. Okay, it has crossed Ichimoku. Now, if I expand this figure, you see this is the point of time is for the short time, and then when it has gone below the cloud, I will exit. This has crossed down. I will exit from the stock. Now it is the time to enter. Okay, time to enter the stocks, and whenever it is fully out of the cloud, even for the 5 minutes, you can see it is fully out of the cloud. So those who are further short-term money making business, they will now start buying this stuff. Is it clear concept?
Yeah. Yes, thank you.
Okay, so it will depend upon your strategy.
Okay.
Any other question? Okay, if there is no other question, then let me what do you call end this session, and then thank you. And I think we will what do you call we will have one more session, and if you want, I mean, it depends upon you. I want to take one test session just to check that how much you learn. So maybe I will design some multiple choice question and then take an online test. Okay, and you need to just select, and it will be a good thing if you know it is not like that. Okay, whether you passed or failed, there is no passing or failing, but there will be definitely, I mean, you will be able to understand something. So maybe if you want, then I will start designing those questions, which will be the simple questions, but by attending the questions, maybe you will clarify your doubts. So I don't know whether
That will be good. Yes.
Yes.
will it be good. Then I will start
Yeah.
designing those questions. Simple, because
Yes, sir.
I know every at the end of every learning, I mean, like in our school days, no, I mean, it is not only learning, we have to also appear some exam just to know that whether we have learned properly. Okay. Okay, thank you very much. So
Thank you.
next
Sir,
week,
one more thing.
yeah. tell
I'm
me.
sorry I joined the session late today. Like, will you be covering mutual funds also sometime?
Mutual fund, okay, I can cover. I have not thought about that. I also know about the mutual fund, but I may not be the. I mean, I have spent some time back a little this thing. But basically, mutual fund, I maybe okay. I will cover if you want.
Okay.
But in order to know the mutual fund, the most myth is that you need not know about the stock market. But the people who are investing in the mutual fund, they should know about the stock market. Okay, otherwise, you cannot evaluate the mutual fund properly. But I can take a session.
Okay.
Okay.
Okay, sir. Yeah. Thank you.
Okay. Thank you.
Yeah.
Bye then. Yeah.
Bye.
Thank you.
Yeah.
Thank you. Bye bye. Have a nice weekend.
Yeah.